General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Hey everyone, it's Judell here from MPC Markets, welcoming another episode of Bulls vs Bears Global Alpha Edition. I'm with your co-host Richard Nader. How you going, Richard?
Good morning. I'm well. Yourself, Finn?
Yeah, pretty good. We're getting some hints from the bond market of a potential super cycle on the horizon. It's a little bit bullish of me, but let's dig into it and see what we can kind of decode from this situation. So inflation in the US came in at 2.4%. So that was actually beating economists' expectations of 2.5%, down from 2.7% in December. So a pretty positive number there. Investors flocked to fixed income investments, such as US 10-year Treasury bonds, pushing yields down to around about 4%. So pretty dramatic move there in bond markets. And what this means is rate cuts are actually being priced into the market. And so what does this actually mean for the market? The market is starting to show a risk-on appetite. So increasing the possibility of more liquidity. The new Trump-appointed Fed Chair Kevin Walsh is starting in the 15th of May. So exactly just under 1 month from now, which is another bullish signal. And the reason this is bullish is Trump has a bit of an agenda. He's trying to refinance the national debt that was issued during COVID when rates were quite low. So there are a lot of incentives to actually bring rates lower, which is positive for a few things. Nader, in terms of the outcome of this, we will see it unfold as US markets open up this week. They are closed today, but will be open tomorrow. If things do tend to unfold in a positive way, what are you looking at in terms of equities?
I think we'll see a cycle back to sort of your high growth stocks. So, generally speaking, when we see rates come off and money being cheaper, people, borrowing to sort of find that growth that they haven't had in other investments. So, your tech names, your medical names, I think will do quite well in a low rate environment, as well as other, higher growth things like rare earths.
Yep,
Businesses
absolutely.
along those lines.
Absolutely. I'm looking at cryptocurrency. I know it's very out of favor at the moment, but in terms of a low interest rate environment, Bitcoin, Ethereum, things like Hyperliquid tend to perform really well. And considering it's been priced pretty low over the last couple of months due to the kind of 4-year cycle, it's putting it in a pretty nice position for lower rates to have a bit of a run. I'm also looking at some kind of select commodities. Things like gold and silver tend to perform quite well in times of uncertainty and in times of high inflation. So the kind of commodities I'm looking at, for example, is actually copper. We are seeing a massive rollout of data centers over the next 10 years, and copper is a major part of that, among other kind of electrification themes. So I'm quite bullish on copper going into this kind of potential rate cut cycle in the US. And obviously things like fixed income, which may be in the form of things like fixed coupons, private credit, but definitely staying away from variable income. So if you are interested in seeing what and when we are looking to invest in and what we advise our clients to invest in, have a look at Mosaic. This is our in-house platform for stock recommendations, research, and insights. You do get a 30-day free trial, so have a look and download or get an account on the web app. But that's all for today. Thanks, everyone, and we'll see you next week.
Take care.